look at the area. What is most likely a natural disaster that is going to affect your property? I would talk to neighboring communities around. Maybe if there's like a shopping center close by, go in and talk to the owners there and say, hey, during the last storm, was there a flood here? Has it ever flooded here? What are your thoughts on that? And they'll tell you. A lot of times you'll go in and they'll say, oh no, it there was a flood zone here at one point in time. I've never seen it flood once, not even get close. But then other people will tell you, oh yeah, it flooded really bad. You want to make sure to get that taken care of. So I would ask questions, do your research, look at different news articles and things like that for the area. And that will give you a good sense of what things have happened in the past and what you could probably look for in the future. So.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba, a real estate investor. And today I have a very special guest, my good friend, J.T. Lynch with me. Welcome, J.T.
Hey, thank you for having me.
A little bit about J.T. J.T. is a commercial insurance broker at Romney King Insurance with expertise in commercial lines coverage and construction risk insurance. And today we'll be talking to J.T. about multifamily insurance strategies. So once again, welcome, JD. I'm excited to have you with me. And I wanted to start a small little background. I wanted to ask you if you can share your brief background with me and what inspired you to become multifamily insurance broker.
Sure. Brief background. I started out in insurance at personal lines with Liberty Mutual. And it really wasn't for me. Liberty Mutual is a great company. Nothing against personal lines or anything like that. That you can do very well at that, and people need help with that as well. But I'm in it for relationships. Having to get 10, auto or home deals a week, and then not really ever talking to your clients again. That just didn't really sit real well with me. So I met Jeff King actually at a brewery. We were meeting up with realtors, and he sat down right next to me and we started talking, and I mentioned to him kind of my thinking of that, and he goes, yeah, I've got a spot for you. You'll like what we do. So the rest is history. And it just goes to show you never know who you're going to meet. And if you think, if I was a vendor thinking, oh, I'm not going to sit next to another insurance guy, that's not going to help me at all. Well, it did. Right. So you never know who you're going to meet at some of these events. But he was definitely right. I love the relationship of a longer commercial type, I guess, dealing with the lenders and all that, and then working with not just this project, but your next project coming up, and then seeing you at different groups and things like that. So that's what I really like to do. And then coming on podcasts with you. So this is definitely my area where I need to be.
That's all right. And you said it very well. You do not know who you're going to meet. So networking is the key. Just go out and meet people, make connection. I mean, that's the purpose of life anyways, right?
Sure. So yeah, exactly. And then the commercial space, it's a longer play, and you're going to have fewer clients and things like that. But especially with multifamily, it's such a tight knit family. Everybody is so helpful and willing to help each other that I couldn't ask for anything more. And I'm learning along the way as well. And I've got some passive investments myself. And it's the only thing that made me money last year was my real estate. Everything else, my IRAs, even my kids' Vanguard accounts for their college savings, they lost money, but my real estate investments didn't. So I'm starting to do more self-directed and getting more into it as I go.
investing in multifamily is a solid vehicle. By the end of the day, people need a place to live regardless.
Yeah.
I would say it's a recession resistant asset class, if you look at it that way.
Well, and I don't know anything about the stock market. And so do I feel like I know everything about multifamily? No, absolutely not. But I know a lot more than I do the stock market. And I know, you and others that can help me if I have questions. And so if everything's going to be a gamble, right? But this is less risky than it would be just telling somebody, hey, put my stuff in the stock market, and it could just disappear overnight. And there's really no explanation, and you just have to take it. With a multifamily, there's a tangible property involved. And like you said, that people have to live somewhere. So you find a place that people are moving to. And I feel like all my clients, their properties are at 93% occupied and have been for a couple of years now. So it's a great space to be in for sure.
That's true. And then it's more like a calculated risk, I would say.
Right.
And something more tangible you can touch and feel,
Yeah, I can drive by it. Yeah. And it's still
exactly. And the operators firsthand as well, because you build the lifelong connections with them. And then just like working together, it's like a team sport.
Yeah.
It's not like something unknown, Apple and Google investing money. You don't know which way the stock is going to go.
Yeah.
And tomorrow it could be, 100% down, belly up, and boom, you're gone.
Right.
It's something not like that, a little bit more reliable, I would say.
Right. And I always invest with my clients on a deal that I'm insuring. And that just helps me and helps them know that, hey, we're in this for the long haul. And, I want to make sure to get the best options for you, because it reflects on me, and I want better returns too. Right. So, it's all around. Yeah. Just a great idea. So I'm getting more and more into it as we go. So
that's true. More confidence in the deal as well.
Yeah, absolutely.
Coming on board because you're underwriting the deal as well. When something comes to your table, you're looking at the numbers, and it gives more confidence to the investors if they're coming from your side of it. So let's talk a little bit about the multifamily insurance. How would you define that?
Multifamily insurance is insurance on your commercial property. It's one of those things that's necessary to have, because, as you know, these accidents do happen at properties, whether it's physical damage to the actual property, or one of your tenants or guests gets hurt on the property. You need protection against that. So similar to your home and auto policy that you have, everybody has. This is for a commercial, larger space. And depending on your loan, your lender is going to have certain requirements that we need to meet, which is kind of nice sometimes, because you don't have to guess at which coverages are going to be right for you. No, your lender is going to tell you, we have to have these, period. Basically, it's our property until you have it paid off, and this is the way we want it. So we always go out to find policies that meet those lender requirements. And honestly, those requirements are good to have anyways. You want to make sure you have the correct coverages in place so that you're protected. A lot of owners will have different risk tolerances. Some will want the highest wind hail deductible possible. Some want the lowest possible. But the good news is the lender requirements really kind of narrow it down and say, look, your risk tolerance might be this or that, but no, ours is this, and this is what we're going to stick to. So that makes it a little bit easier, even though you and me both have seen some lenders that, man, they're sticklers and they will not budge at anything. And that makes it a little difficult too, but fun as well and challenging.
So if you just go with the lender, that kind of gives you the confidence that you have adequate coverage. You do not have to go beyond that. Or how do you gauge that this is the right policy for me?
Yeah, sure, you can. A good example would be if you have a property that's not in a flood zone, but maybe it's really close. Maybe you're in an area like Houston and it's not in a flood zone, but we all know during Harvey, there were areas that weren't in flood zones that ended up flooding. So your lender might not require flood insurance, but you're thinking, man, it would be really bad if this property flooded. What are we going to do? So you know what, JT? Yeah, let's add flood insurance just in case. Even though my lender's not requiring it, we as a group decided that we want that as well. So yeah, there's times that you could kind of go above and beyond what the lender's requiring. you definitely can't do less what they're requiring, but yeah, you can certainly do more.
So talking about flood, I have seen that some people in Houston area, their properties are listed in the flood zone, but they say no, they can remove that from the flood zone. How does that work? Like, is it like a good idea for people to do that, or because that way they're not required to have a flood insurance, right?
Right. And so it's not always going to be the case for every property, but a lot of times these FEMA flood maps or whatever technology you're using to determine these flood zones, a lot of them haven't been updated in quite a while. And you and me both know that there's been a lot of construction in Houston. Things have changed there. So your property that was in a flood zone, well, now upstream, they did a whole bunch of work on this new, 5,000 house community or whatever. Well, that diverted a lot of the water. So now it diverted it away from you. And so maybe it isn't in a flood zone anymore. And they just haven't updated the flood map. And so you can get what's called, I think it's a Loma, LOMA letter stating that, yes, this is now out of a flood zone. As long as you share that with your lender and everyone agrees that, yeah, we're all good. No buildings are within that zone. Then, yeah, you could be taken out of that zone. But again, maybe you still want to have flood insurance as well. So it just kind of depends on your risk tolerance and really how close you are to the next flood zone is really probably what you want to look at. So.
So what would you recommend? Like, what are some most effective risk management strategies from your point of view, because you say, you can decide whether you want the flood insurance or no, even though maybe you were in the flood zone a few years back, but now not anymore. But, how do you have that kind of, I would say, satisfaction or peace of mind that, I'm 100% insured,
Yeah, it's hard to know. There's probably no way that anybody out there is 100% insured on everything, right? You're probably not going to have earthquake insurance in Houston, but who knows? Maybe something does happen. I don't know the last time there was a tremor in Houston, but we've seen tremors in the Oklahoma area, not near what you would consider, like California, right? But some people had been known to get earthquake coverage just because of that. So it's really hard to know. But what I would say is look at the area. What is most likely a natural disaster that is going to affect your property? I would talk to neighboring communities around. Maybe if there's like a shopping center close by, go in and talk to the owners there and say, hey, during the last storm, was there a flood here? Has it ever flooded here? What are your thoughts on that? And they'll tell you. A lot of times you'll go in and they'll say, oh no, there was a flood zone here at one point in time. I've never seen it flood once, not even get close. But then other people will tell you, oh yeah, it flooded really bad. You want to make sure to get that taken care of. So I would ask questions, do your research, look at different news articles and things like that for the area. And that will give you a good sense of what things have happened in the past and what you could probably look for in the future. So
I think about insurance, it's just like sometimes you don't even get to use it and your time is up and you're just paying so much money. It's just like you're paying for your fears. You know, that's the way I look at it for the insurance. And now whether it's a car insurance, your home insurance, or whatever insurance you're buying, you just fearful about something, But for the multifamily asset class, because we have multiple tenants there, multiple parties involved in that, definitely wanted to have insurance. But what could be the most creative or innovative way of doing insurance that you're not paying too much either at the same time? I mean, like I said, you're paying for your fears, but you're not fearful at the same time that much either.
Right. I think it's a great question. And I think the best example of that would be your wind and hail deductibles. Depending on where your property is, especially you're talking about Dallas right now, so that we get hailstorms all the time in Dallas. And so these hailstorms sometimes have, the softball size hail that do a lot of damage to these roofs. And we can count 3 or 4 storms a year that come through and will hit roofs. Some won't be, hardly anything, and some will be pretty big. But knowing that, okay, we need to have good wind and hail coverage and probably a lower deductible in case a storm comes through and I need a new roof. I want to pay as little as possible for that new roof, right? So then you pay a
Mhm.
low deductible, get a new roof. But what if you just put on a new roof last year?
Mhm.
Well, these roofs are going to withstand for a good 10 to 15 years, if not more nowadays. So if you got a brand new roof last year, maybe
Mhm.
you can, withstand a little higher tolerance for a higher wind hail deductible, and that'll save you some money this year. So if you have an older roof though, and the next storm that comes through you're going to need a new roof, then you probably want a lower deductible so that you don't have to pay as much out of pocket to get that new roof. So I think knowing your property, knowing the risks that are potential to come through is key, and having the peace of mind, but also saving as much money as you can as well. So,
Yeah, the thing for me is, and please don't get offended, it's just like
oh no,
you are paying the premium, right?
hmm
And for your insurance, and then you're paying the deductible. And once you claim it, the insurance prices go up.
yeah,
So what do you have to say about that? How could be you so creative that you are saving some money? Because it's like, if you look at the whole picture holistically, you're end up paying more money. And just because you're
yeah,
fearful about something, it might happen and it might
sure,
not even happen. And what if you just take all that money that you're paying to the insurance companies and put it in an account, set it aside, or maybe invest in real estate
hmm
and just get a better capital return on that. So, and then whenever you need it, use that. How would that analogy work? Because I heard somebody talking about it. That's what I wanted to share with you.
yeah. I've heard some. Usually, we'll see it with bigger corporate type firms that are buying a whole bunch of properties, and so then they have this huge, fund set
Mhm.
aside just for insurance.
Mhm.
I believe in their case, they don't have certain lender requirements that maybe another multifamily operator might have, that they can kind of get away with that.
Mhm.
I think if you're getting a Fannie or Freddie loan, I don't know if they would let you do something like that, but certainly if you're a bigger operator and you don't have those type of loans, yeah, it would be something to look into for sure. I know a lot of people in Florida right now, because the deductibles are so high for like your named storm, if a hurricane comes through, they feel like they're self-insuring anyways. And so, all right, well, let's just have a even higher deductible and I'll just set money aside since I'm self-insuring anyways. So it's a gamble. It really is a gamble. I get what you're saying is, I'm spending all this money and I don't even use it. That's a good thing, right? Nothing
Mhm.
happened to your
That's
property.
true. Mhm.
And that's one thing that as an agency, we're a full service agency, so we help manage your account after it's bound. So say you have a small kitchen fire at your property, it looks really bad. We need to make a claim. Well, I'll advise you, look, your deductible is $25,000
Mhm.
for this all other perils, claim that you're going to make. How much damage is really there? I know it looks really bad, but sometimes these small kitchen fires, it looks really bad, but once you sort through things, no, actually we
That
can get,
much. Mhm.
$15,000 and we'll be back in order, or maybe it was $25,000 or $30,000. And then I'll say, Vinky, that, you're not going to get much out of this claim once you put it in, and then that claim is going to be tied to this property for the next 5 years. It's probably not worth it to put it in there. So in that case, no, you would pay out of pocket for that, and let's wait and use a claim when, man, this is going to cost hundreds of thousands of dollars. We don't have the money to pay for that out of pocket. Let's make the claim, and then we'll have the insurance company take care of that. So it's it's a it's kind of a gamble. It depends on the situation, but it's
Mhm.
definitely something that we help you with if and when that time happens.
Yeah, thank you. I like that. Actually, let's talk about the claims since we're talking about claims.
Mhm.
How do you process the claims, or what would your advice be for me or my listeners that, when you're filing a claim, what do you should look for so that you can make the maximum out of it?
So one thing that I want to stress to everyone, if something happens, make sure that everything's addressed right away, right? You've got the authorities out there. You've got your property management company documenting everything. You've got the area roped off and safe. Make sure to take care of your property first. We can put in a claim sometimes up to more than a year past the occurrence, right? So you don't have to do it the day after, right? You want to let me know so I know what's going on. But take care of all of those things first. Have everything documented, and then I'd even say get a contractor out there. Take a look at the damage. Let's assess how much damage there actually is before deciding to put in a claim or not. I'm not a contractor, so looking at a small kitchen fire, I may go, Vinki, I think you're right. This seems like a lot. But then a contractor looks at it and goes, no, we're 20 grand, we'll be okay. Right. Mm-hmm. So once you get that estimate, then you'll really know how much damage you're dealing with. I'll advise you on what the deductible is if you don't know, and then we can make an educated decision based off of that, and then put in the claim when we need to. But there's really no sense to hurry into that before we have more information about kind of what happened and what is going to go into it. But then, we decide to put in a claim. I'll notify the carrier that, hey, this incident happened. Here's the claims report that you have from the property management company. Anything from the fire department or police department, we'll give to them. And then at that point, I'm kind of, my job is to kind of just make sure that everybody's in communication with the claims adjuster that would then contact you. And I don't have much say from there, but I am there to kind of hold your hand and make sure that everything is communication is going back and forth that way. So.
You know what? I was talking to a public adjuster a few
Mm-hmm.
days back, and then he mentioned that if something happens to your property or whatever, it's always a good idea to have a public adjuster along the side of the insurance agent, So what is your thoughts on that? Like, would you recommend to have a public adjuster because they can look into things a little bit more minutely?
Yeah. It's a good question. For us, we represent you, okay? You're the client, and we help bring carriers to you to find the best option, right? Mm-hmm. And so then we kind of represent them both. But I'm not beholden. A lot of people think, oh, JT doesn't like, public adjusters because they're anti-insurance or whatever. I don't know. I don't think one way or the other. I think it is a good idea to know one. I've got several here that I can refer you for them to you. So I think it depends on the claim, because as you know, these public adjusters, they're not working off of charity, right? They're not working for free. Mm-hmm. So their job is to make sure that the claim works smoothly, but also that you get the maximum amount for that claim out of it. Well, that maximum amount also goes to pay them too. So I don't know, maybe the claim was going to pay out at $90,000 and they got you $100,000 instead, but now you owe them 15. So did you need that person there necessarily? Well, maybe not, so I think it really depends on the situation. I think the larger and more complicated the claim, definitely warrants a public adjuster, but something smaller like the small kitchen fire we were talking about earlier, probably not. It probably wouldn't warrant paying somebody else when this is a pretty simple cut and dry. There was a small kitchen fire. It's going to cost $50,000. We're putting in, your deductible is $25,000. You get $25,000 back, basically. That's pretty simple, right? So I think it would depend on the nature of the claim, but certainly, yeah, have one at the ready that and trust and can call in if something gets weird, because certainly you want all the resources you can on your side when and if that happens.
Mm-hmm. And I think basically it's like a trade-off, because if you do not have the time or the bandwidth to do things on your own, you might want to get somebody on board because you're paying somebody else to be your eyes and ears to something, right? To work it better in your favor. but not necessarily is going to happen all the time. So at this point, I wanted to ask you about some of the misconceptions or the myths about the multifamily insurance that people might have.
Sure.
Or how do you address those? Is somebody bring that up to you?
Sure. Yeah, I think the claims adjuster is a good one. And to get back to that real quick, I've seen sometimes where they hire an adjuster and they do help. But when an adjuster's hired, I'm kind of at that point, questions for me would then need to be addressed towards the adjuster, because we try to simplify things, and you've hired this adjuster that is now speaking to the claims adjuster on your behalf. So I'm kind of taken out of it altogether. And I've seen some cases where they hire an adjuster and they really didn't do much. And it's like, I could have done all of these things for you. I could have answered these things, and we will go back and forth with the claims adjuster and, plead your case as best we can for you as well. So there's a lot of things that we do as well for you. So it's the claims adjuster is not always the best option, but sometimes is, definitely necessary. Let me think of some of the, go ahead.
Or the other misconception and the myth could be, like it's hard to get hold of the insurance company, given, something goes wrong and they're just like not together, it's like that's the reason you wanted to have some mediator or some adjuster in the middle.
Right. And I think a lot of people get that because of their experience with maybe their personal auto. They were in a wreck and it's a nightmare trying to get a hold of somebody. That that a lot of that has to do with, well, that's because you have to do it on your personal time and you don't have time to, because you got to work and you got to do all these other things. But for us, this is my full-time job. So no, we will make sure that you get in touch with the correct people. The carriers that we work with, they're all A+ rated. Really haven't had a ton of issues with communications and things like that. There's sometimes discrepancy of, well, no, I think it should be this. My contractor told me this, and you're telling me this. Sure, that's going to happen, but really, communication is no. These people are pros, and this is a lot different than your, small
claims
auto policy, I will say that it seems like nothing in insurance happens very quickly. So don't expect things to happen necessarily overnight. If you had a claim and you get a payout, you're probably not going to get it overnight, right? So just be patient with the process. It's being handled. It's got so many checks and balances it has to go through, and the poor claims adjuster, there a lot of times it may be a third party. They just enter their report and they send it off, and then it's got to go through the chain of command to check off different things like that. So and then a check actually coming to you, it may take several months. That doesn't mean that it's not going to happen. Doesn't mean that there's anything wrong. It's just that's kind of how the process is, and unfortunately, it's longer than what everybody wants, and I understand that.
So what would you recommend or tell your clients when somebody comes to you to get a policy? What kind of things they should be paying attention to? Because you said the policy is basically decided or dictated by the lender because they want certain policy to be in place because they are the one who are lending the money on it. So they wanted to make sure that their money is covered, they are covered. But at this point, premium could be high, or, there could be a bunch of other things. What do you generally recommend?
Say before you even submit your LOI, right? I want to know what does the insurance look like in this area? Maybe you're looking in Dallas for the first time and you're from used to investing in Georgia or North Carolina or whatever. It's going to be quite different in Texas or Florida than it is in those states. I would contact me first. I will give you a free insurance estimate on that property you're looking to put an LOI on. I just need the rent roll, the T12, and the offering memorandum if you have it. And then I can, we've been doing this so long that we might insure the property already, or we have before. probably know the brokers that are on it. And so we probably have a little bit more information than you even have. But basically the property that you're looking at, I'll look at like kind properties that we insure in the area. And based off of those insurance premiums, I can get you much closer than usually what the T12 says. But then I would also, if I were buying a property, I would make sure to know what are the big natural disasters, what are the risks that can come through in this area. If you're in Phoenix, there's not many, right? But Dallas, we're looking at hailstorms, tornadoes. We don't get hurricanes, but we definitely get the effects from the hurricanes that come in from the Gulf. So high winds, things like that, thunderstorms all the time. Florida is a mess. So you want to make sure to just know the areas that you're looking at. And one thing that gets overlooked is crime. Your general liability, the rate for those are going to be based off of the crime scores in the area. And I know if you're looking anywhere around Atlanta, it seems like anywhere around Atlanta has high crime scores. That doesn't mean don't buy the property. Just know that, hey, the general liability policies that we get are going to be a little bit higher than maybe what you're used to seeing. And maybe we need to look into some CapEx items to help the safety of the property, improving the fencing, lighting, and things like that for your tenants. I think that sometimes, and I talk about this all the time, that there's so much to know about underwriting these properties that you get kind of lost in the spreadsheets. There's just numbers going all over the place. Well, you also need to look at the property as well. I can't tell you how many times somebody's got this property under contract. They're going to spend $28 million on this thing. And I ask them, congratulations. I need to know a few items. How old is the roof? Oh, I have no idea. Okay. Well, yeah, you would want to know that, right? Because if, like we said before, depending on your deductibles and things like that, it could be your first $500,000 mistake if you need a brand new roof the next storm that comes through. So I think taking your nose out of the spreadsheets, really looking at the property, is this somewhere that you would take your family at midnight? No? Okay. Well, let's address that and make sure that the property's safe for your tenants. Is the roof very old and it's something you're going to have to replace pretty soon after you acquire it? Then let's have a plan in place for that. And a lot of owners, as you know, they'll already put $150,000 aside to fix that roof here in the next couple of years. They just have that plan in place already. So I really take a look at the property, the future things that could go wrong that you may need to fix, so it doesn't surprise you later on. I think that the biggest thing that I would look into before buying a property.
Awesome. I think you mentioned so many good things. So I'm pretty sure people who are listening, they might think about improving their insurance coverage at this point. So what kind of advice would you give to the people who might, listening to you, wanting to think about improving their insurance coverage or the risk management for themselves?
Yeah, improving your insurance coverage, depending on where you are, but this year has been extremely challenging for insurance. We've seen premiums increase for a number of different reasons. It seems that it's getting harder and harder for insurance brokers to find the best fit. And if your agency isn't really, it's not really their thing to write multifamily insurance, they can do it, but they don't do it all the time, then maybe they don't have the best fit for you. Whereas in previous years, they'll be fine. For us, 98% of my clients are all multifamily. I do have other clients that we insure, contractors, roofing companies, trucking companies, you name it, we can do it all. But 98% of my clients are all multifamily. And so all day long, all I'm doing is multifamily insurance. So we've got the relationship with all these carriers that will write it. We're another agency that doesn't do that. Maybe they don't have the markets for it. And it seems like this year, especially, it's getting so much more um, tough to find the right fit that, yeah, you really need that expert to make sure that they've got the best options for you. So I would say find a broker that you know is in this space, that you trust them, and make sure that you're with them and not just with your brother-in-law that owns an agency, because right now it's really hard to find the correct policies for you.
Great. So how do you stay on top of the innovations in the insurance or some kind of emerging trends? Like I heard about cyber insurance, there's so many cyber attacks. Is it like part of the general policy? Is it like something add-on? Or if you heard about that, if you can share.
Yeah, a lot of times it will be a part of the policy, but there'll be disclaimers in there. So it'll have, maybe $25,000 for your cyber data, but there's an exclusion if a member of your team were to steal money or to steal data from you. So it'll protect you from outside sources, but won't protect you if there's theft from inside the group. And it just depends on the policy. But a lot of times, that is included nowadays. And yeah, something that you want to ask. But then, if you've got a good property management company that you've hired, and it's, a pretty big outfit, they're going to have protections as well. And they're usually the ones that deal with a lot of the data and the money changing hands. So maybe it's not as important to you because, the property management company has that coverage. And yeah, you want to, you want to make sure that you're added as an additional insured onto their policy, and that they're properly insured as well. So that's another big piece of the pie there too.
So the other question was like, how do you stay on top of all these changes in the insurance policy or the insurance companies?
Yes,
day to day.
That is a great question, and it's the answer is it's very hard. It seems like it changes all the time, but just like you and I go to conferences to meet investors, there will be other insurance brokerages there as well. And again, you would think, oh, well, JT doesn't want to see them there, right? He doesn't. It's not good for his business. Sometimes that's the first boost that I go to are the other insurance guys and gals, because we share information just like everybody else in the space. There's enough business to go around, and we actually help each other as well. If there's an agency in Georgia and they've got access to somewhere that for some reason I can't get a hold of, or I've never heard of this small carrier that does this or that, I can call them and see if they can help me. Right. So I'll use them for just see what they're hearing, listen to a lot of articles, and then we, just like anything else, stay close to our underwriters at the different carriers we go to. We'll take them out to dinners, wine and dine them, and pick their brains, because they're the real ones taking a look at these risks for us. And they're the boots on the ground really to know what kind of trends are coming. So we try to stay as close as we can, using every possible resource we can as well. And sometimes it's a moving target, it feels like, but at the end of the day, it makes it challenging and fun. And if it were just the same every day, then it would be kind of boring. So it is kind of neat to see things changing and different markets that open up, and we get all excited. And they're in Texas now. Let's call them. Remember, they're in Texas. So that's neat as well.
Oh, nice. Thank you. So we're out of time. I'm going to ask you one golden nugget for my audience.
Okay. Let me think. So here's something that's pretty interesting. So right now, and we've been kind of doing this for years, but right now it is almost standard in coastal markets that carriers, they just do not want to write certain properties. So then it limits the amount of places that we can go. Maybe there's only 5 carriers that we can even talk to. But most of these carriers, they'll say, I'll write it, but I won't write the whole thing. I will write the property coverage without wind and hail. So then we have to go to somewhere else that will write the wind and hail coverage. And maybe they'll say, I'll write the wind and hail coverage, but not all of it. I'll just write the first 50% or the first first $100,000 worth of coverage, and then we got to find somewhere else to go to cover that, and then we have to find somewhere else to go for the general liability, and so that is mind-boggling to some people when I explain that to them. Yeah, sometimes there's 7 different carriers that are insuring this one property, because that's what we have to do now. It is so tight that we have to get insanely creative to find the right fit and piece this all together to make it work. So that's my golden nuggets of the day, and that's what's keeping us busy for sure.
That's good. So this brings us to a rapid fire round. I'm going to ask you 5 questions. You have to answer in 1 word or 1 sentence only. Ready?
Okay, I'm ready.
So the first question is, what is the one most important thing that you have learned in life and it always worked for you after learning it?
Be happy in the moment.
Oh, I love that. That's awesome. Because every moment, if you're happy, the next moment is going to be happy too, because your present moment is dictating your next moment.
My son plays basketball, and I was sitting next to his teammate's grandfather, he's got to be late 80s, 90s, but just a joy to talk to. And he told me that growing up, he had like 5 daughters, and they were all within a year of each other. And he said, I don't know how I did. I've been to so many basketball games and volleyball games and all these things. I don't know how we managed to do it. I don't know how we managed to afford it. And it seemed so hard then. And he said, looking back now, it was the best time of my life. And I wish then I knew that this would be the best time of my life, and I would have appreciated it a little bit more. So that it always gets to me. It's like, no, these are the good times. And I always keep reminding myself, no, don't look for the good times. No, these are the good times.
I agree with you 100%. Because the present moment is the best time that you have. That's the only time that you have actually in your life. Because the past is gone. You have no control over it. Future, you do not know. Right. The only thing that you have is present right now, right this minute.
Yeah. These are the good old days. So live like it.
So if you miss this moment, you miss the whole life. You miss living that moment.
Right.
And what's going to happen is in the next moment, you're going to be regretting the past. Oh, I didn't do this.
Yeah. That's
the most important thing.
There's times where we regret so much that we don't live in the present. And then there's times we look forward to, or I can't wait till, and you don't live in the present. Well, what about now?
That's true. So share one good book that you have read and you feel like, you wanted to recommend this to my audience.
I'm trying not to be so cliche, but I think How to Win Friends and Influence People. It's an old one, but a great book.
It is a great book. In one word, what does life mean to you?
Joy.
I like that. What is your biggest passion?
My family, my kids.
I like that. If you could turn back in time and talk to your younger self, what would that be and why?
I would tell myself not to sacrifice my happiness for a certain job. I would say, go find out what you want to do. If you're not happy in what you're doing, get out of there. Go find something else. Be happy. Life's too short not to be doing something you don't want to do.
Yeah, I like that. You always should do whatever you love. That otherwise, you're just gonna be miserable all your life.
Yeah,
and if you do what you love, you're never working.
Yeah, and I don't necessarily like the whole, well, what's your hobby? What do you like to do? And then just go do that. Well, no. What if your hobby is basketball? Well, I can't go play basketball for a living, so that is not a good answer, right? I think finding something that you actually enjoy doing and you don't regret working. If you're on Sundays, if you're getting those pits in your stomach because you don't want to go to work on Monday, then something's wrong. Maybe you need to find something where you don't feel that way. And life's too short just to do that because of a paycheck. Go find something else. There's so many things out there that you have no idea that you might love, and just don't be afraid to find something better.
Yeah, you said it very well, because the thing is, in this whole race, people forget to live.
Yeah.
And there comes your end, and you just feel like, oh, I didn't even live. I was just chasing the money. I was chasing this and that all my life.
You'll be 87 years old at your grandkids' basketball game going, what was I doing? I should have done this or that. Yeah.
That's true. So, JD, how can people reach out to you?
The easiest way is through my email at jtlynch, LYNCH, @rameyking.com.
Thanks, JD. It was a wonderful conversation today.
Yeah, I had fun. Thank you for having me.